All right. Good morning. Happy Hump Day. We are live streaming on Wednesday, as we always do. Um, Yesterday we had to move down. We'll go over the counts and stuff here in just a minute. But first, welcome to the stream. My name is Jacob Gabbard from Invest with Jacob, and today we're going to be highlighting our indicators we do every week on our live stream. If you're not aware or you're new to the stream, we have our indicator here. We made it ourselves. It's for trading view only. It's called IWJ Pivot Point Pro, and it gives you buy and sell reversals that are very powerful and do very well overall. It is a forward-looking indicator that uses price action. It's a big difference from what you see on most indicators, which look backwards and wait for things like moving averages to cross, or the RSI to cross, or the MACD to cross, or name another way to look backwards and see what the market is doing and not be in the market on time. The indicator does give you early entries, meaning we're very close to bottoms and tops, and catch big reversals like that. It's very simple to use. You see the buy and sells on the screen. There's a few simple rules you must follow. First, you need, in blue, we have post-market trading, and in yellow, this is pre-market trading. That switches at midnight, basically. And we have that turned on because you need it for the indicator to work properly. You need a trading view account. You need real-time data on the ES and the NQ. So over here on the right on my screen, you can see NQ1 and ES1. If it's got a little orange D here, that means your data is delayed and it won't work properly. So you must have real-time data. And then we simply wait for the buy or sell to appear. We enter the market, and then we see how the trade does. The final rule is that we stop trading at 10 a.m. every day. That's Pacific Standard Time, so that'd be 1 p.m. Eastern Time. And the reason for that is the second half of the day, volume drops off, movement drops off, and you tend to get a choppy market. So we trade the first half of the day and use the indicator to do that. And then we set our risk reward in a way that is so powerful that we routinely beat the market. Now, does that mean every trade is a winner? Absolutely not. We have plenty of losers. But it means that when we have losers, our risk reward strategy works so well that over time, we beat the market on a very, very regular basis. And we'll look at those numbers here in just a second. But essentially what you have is you have an entry price. So we'll just say that this is our entry price, and you have your stop below this, right? Or, I mean, just have your stop. Doesn't matter. If we're on a call, it'd be below. And that stop is 50 cents of SPY price. So if we got in at, say, 638 on a call, our stop would be 637.50. So 50 cents of the actual price of the SPY. And then what we have is we have our first take, meaning where do we take our first profit? And that is at 20%. So you have your first take right here. And what happens is when you have these winners, you get these 20% winners, these will cancel out the losers. And then after this, you close half of your trade for a 20% profit. After that, if the market continues to go our way, these runners become basically all profit, because this part down here, this win right here, cancels these losses down here. So this all cancels out, and then our runners are pure profit. So our risk reward is really good. Our risk is actually really low overall because of this. We've set up our risk reward strategy that so that we can take a small win, and then our big wins are profit. So in doing so, give me 1 second here. In doing so, over the last 19 months, we've had 15 winning months and 4 losing months. And that has resulted in, I'm going to put the numbers on the screen here in just 1 second, that has resulted in us on a $100,000 account trading 25 contracts at a time, which is about 2 to 5% of your overall capital on any 1 to 5% of your overall capital on any given trade. That has allowed us on a 100K account over 19 months to be up $70,000, $72,000 actually. And so you can see here, we've had losing months. May was a losing month this year, and November, December, and March were losing months last year. But we have far more winning months, and our winning months are very, very big. You can see of the 4 losing months, you had a 550, less than 1,000, a 1,700, and a 2,250. November last year was just a really, really weird month, so it was a big loser. That happens sometimes, but our losing months tend to be really, really small, and our winning months, 3,000, 4,000, 10,000, 14,000, 9,000, 4,000, 4,000, 8,000, 7,000. Our winning months tend to be much, much bigger. Do we have small winning months as well? Of course. But our risk reward structure is built such that we beat the market routinely over time. And that's what you're looking for. The market, you're going to have winning trades, you're going to have losing trades, but you're looking for a system that has an edge. And ours is proven over and over again. It has a strong edge over the market. So that gives you guys the opportunity to use the system exactly how we use it, and beat the market over time. So if you've ever struggled to day trade or trade period, because this is also used for swing trading, if you've ever struggled with any of that, this indicator can help you get in and out of the market at the right time. And what we do is, once you get the indicator, you send me your TradingView name up here at the top, and I give you access. And then you have to have your TradingView account right. And if you don't have a TradingView, I have a link here where you can get one at a discount. And then you get videos that tell you, 1, how to set up TradingView, and 2, how to set up the indicator. And then 3, we give you exactly how we use our day trading strategy. Step by step, exactly what we do so that you can achieve the results you just saw on the screen. We tell you how to do our trend day strategy, and then we tell you how to do our swing strategy. This is also an incredible swing trader. So all of that comes with the indicator. You're getting 30% off of your first month right now, so you can try it out, and it has a 30-day money-back guarantee. So if you go to investwithjacob.com, there's a link down in the description. Check that out. Go to membership plans right here and click on that. And you scroll down to where it says TradingView indicators. And I know it says $59 a month and $5.90 right now, but if you use that coupon code, you get 30% off of this. And if you get the yearly, you get our Advanced Elliott Wave and our Beginner's Elliott Wave course for free. Again, both of them come with a 30-day money-back guarantee, so you can just put it on your chart and watch it work. You don't even have to trade it, so you don't invest any money in it. And if you don't like it, you get your money back, no harm, no foul. And if you do like it, like most people do, you keep it and you make money and you have a wonderful time with it. So that's the breakdown of the indicator. Let's jump into the charts real quick. Our key levels today are going to be our 1-day max up here at 644, our 1-day min down here at 635 and change, 635.25 basically. And then we have put support down there as well, 635. We have another put support. This 640 level is going to be pretty big. There's a lot of puts and calls right on it. And then we have some high volume levels in between here. So those are going to be the key levels today to watch and trade off of. What we're looking for is, well, we're just looking for buys and sells on the indicator, but they become very, very strong when they happen to coincide with these key levels. So for instance, if the market moves up to here and then you get a sell signal, that is a great sell signal because you're coming off this call resistance zone, and that's going to be a zone that fails quite often. So trading off of those key levels is really good. We also trade off of other levels as well, like the pre-market low, but all of that's decided by the indicator. It looks at 170 different things, has 175 different inputs, I believe, something like that, might be 176. 175 different indicators that it looks at, and calculates everything in real time so that you don't have to. You don't have to look at the daily chart versus the 4-hour chart versus the hourly chart versus the 5-minute chart. You don't have to look at the moving averages. You don't have to look at VWAP. You don't have to look at the MACD or the RSI. You don't have to look at volume. You don't have to look at any of that. It's all calculated in real time and given to you. And that's why it's so effective, because when you're looking at things with the naked eye, it's really hard to keep track of all the things I just said, plus everything else we calculate. There's a lot of mathematical formulas and things that go on as well. And all of that's done in real time for you. We don't ever trade pre-market. Pre-market's choppy and stupid. You get a lot of false signals because of it, and it's mostly because of the volume. Volume in the pre-market's non-existent, and it's looking for regular trading hours volume levels, and you're just not going to see that in the pre-market. So never trade the pre-market based on the indicator. You can trade the pre-market if that's your style, but not based on the indicator, because it's just not what it's built for. So very clear entry and exits, very strong swing trading signals. We've gone over swing trading a lot, especially with the Mag 7. You generally want to trade stocks that are heavily traded and have liquidity. Otherwise, it's really hard to get in and out of options. And that's basically what we're trading. We also use this as a retirement account kind of gauge, where the weekly buy and sells tell us when to get in and out of the market. And it really helps us protect our retirement funds as well. So that's the indicator. That's what we're looking at. We'll take a look at the charts here real quick. On the ES, and if you were in my room, I told you that breaking this low here at 64.54 would lead us directly into 64.20. And that's where they came yesterday and spiked right off of it. It was 64, 20, 25, or 1975. Anyway, it was the exact level. They bounced it. They took it down again, bounced again here so far. We are at about the 1.0 of this move down. So it is possible we see a little bounce here where we come down. Bounce, well, if I get my screen to work here. Bounce in a B wave and then down in C into this 63, 60 to 80 level. Gets us back in wave 1 territory. Then we look for an ABC back up in 5 towards 65.30 to 65.50. So ultimately, this area right here is going to be 6,400 area. Is going to be the daily 21 moving average, as well as this consolidation zone right here. So it's a heavy support zone. So a bounce off of that would not be shocking. If they blow right through that, I would look for them to extend into this area and then bounce. Still looking for them to come back up as the primary count. Now, if they can't hold and they do break down, the level to watch them break is 63.1475. If they break this low over here, that invalidates the diagonal and starts to put pressure on the bulls. And then breaking the August lows down here would be the first warning sign to the bulls that bigger things may be happening in the market than they thought. As of right now, though, we are looking for a pullback that holds, and then one more high to complete this diagonal structure, which this diagonal structure right now, you would call it 1, 2, 3, 4, 5. Remember, wave 4s on diagonals do get into wave 1 territory in Elliott wave. That is a hallmark of a wave 4 for a diagonal, so that is a very expected outcome. That is the only time that rule of wave 4 cannot get into wave 1 territory. That gets broken when diagonals are born. On the NASDAQ, same story. They broke us down here. They've gotten into wave 1 territory on the NASDAQ. So an interesting development, because if they continue down on the ES into wave 1 territory, NASDAQ may break its wave 2 low. And that would be a warning sign to the bulls as well. That's down here at 23.048. So we would be looking at this here as still a potential wave 4 for now. So you have 1, 2, 3, 4 into wave 1 territory, and then 5 back up here to 24.1 to 24.284. And that would be the conclusion of the diagonal from there. So we'll see if they're able to find support here. This is a pretty heavy support area. You can see that they spiked through it here, they defended it here, they rejected it here, held it here. So this area here, very good support. So that's what we'll be looking for there. Overall, we'll be ready to trade here in about 22 minutes, but the bulls are still in charge until we break major support. The first warning shot, or the first time we may start thinking the bulls have a problem, is breaking the August lows. All right. Any questions out there before we get into the market opening here in a few minutes? Just so you are aware, We are in a sell right now, but it's a weak sell. So at the open, we might be looking for something like this and then a sell. Something that tests the pre-market high or even this 640 level. Since we are in a sell though, if they remain in a sell, they can come down, test the pre-market low. But we haven't seen much follow through yet from this sell signal. So right now we're still kind of in a choppy zone where we wouldn't get a buy signal if they go up, we would get a sell stop. So how the indicator works real quick, another feature is it also has some cycles to it, meaning it's looking for, when you get a buy signal, looking for this buy cycle to complete, and then it'll start issuing a sell where it sees weakness off of resistance. So we got this buy, it came back up to here, issued a sell, and the reason it issued a sell is it came back up to this resistance and showed weakness. They did end up spiking it a little lower, but nothing crazy. So it stayed in a buy cycle. So when you get a sell, that comes while you're in a buy cycle. And what the sell means is we've hit a critical zone and the calculations have come up with weakness at that zone. So it's looking for a reversal off of a critical resistance zone for a sell signal. That means you should sell, but the market is technically still in a buy cycle that is weakening. In order for that to change, we need to continue on in the sell cycle to the downside. If we continue to the downside, oops, sorry guys. If we continue to the downside, then the sell cycle completes, then you can get a buy for the next move up. Otherwise, you're just going to get a sell stop, this SS right here. That SS means that the sell has stopped out and that it will look to issue a new sell when the time is right. That happened to be over here. They brought it down. They completed the sell cycle. So you got a buy on the move back up. Again, choppy trading in the pre-market. That's pretty common. We don't trade the pre-market. So keep that in mind. So right now, we always look for the opposite of what we see. So we see a sell signal. So we look for a buy. However, I know from experience that this sell signal, and I can see the back end of the indicator, but this sell cycle is not completed. So we could very possibly get a sell as well here because they can spike up, give us a sell stop, and then give us a sell after that. So we'll see how they open. We don't know exactly what we're looking for yet. Many times that the sell signal has been given in the pre-market and they take it down, and you're looking for a buy signal at the open. Right now we don't know what we're looking for just yet. The Mentor Q levels are on the screen. You can see them right here. The 1 day minimum down here at 635.29. Guys, if you want these levels on your screen, by the way, there's a link in the description down below to Mentor Q. You get 20% off of the Pro plan, which is what you need. Full disclosure, I get a kickback from that. However, you get a 20% discount. So we both win. And I only promote products that I absolutely love, and Mentor Q is one that I use every single day, and it is absolutely incredible. Was yesterday a trend day? Yes. Yeah, remember, so if we go to yesterday, so what you had is this spiked the pre-market low, then they spiked the pre-market high. So they started off with a potential trend day up. But remember, they have to break the pre-market high, then they have to pull back and hold VWAP or the 21. They did not, and then come back and break this high. Well, they didn't do that. They failed the VWAP 21 area. They broke down below the pre-market low, came back and tested, which tells you to get the heck out. If you're longs, don't be long anymore. And that saved you from failures. And then they trended down. Trend days are very simple. They either break above or below the pre-market low. They have to hold VWAP in the 21 and then make a new high. If they do that, it's a trend day. And vice versa, break below the pre-market low, back test, and break down again. That's a trend day. Now, is that every time? No, but is it 90% of the time or more? Yes, it is. Okay, so we are getting a green green spike here, so hopefully we get a sell stop, and we'll likely be looking for a sell at the open. Overall, yesterday was a decent down day, and a lot of the Mag 7 got hit pretty hard yesterday, so it's very possible we could see a buy or a bounce today. So just keep that in mind, that a small bounce today would definitely not be inconceivable. We'll see if they can follow through. Bears have had no follow through of late, so we'll see if they can truly follow through today. Or at least into the end of the week. If we look at supporting evidence, RTY is red slightly. Everything basically flat though right now. The banks are slightly green. So keep all of that in mind, that we don't have any major underneath the hood selling in secret areas going on yet. What I mean by that, if you're new here, is the RTY is a good barometer for what the entire market's going to do. So if the RTY is green and the ES and NQ are red, it's very unlikely the market is going to melt down unless the RTY gets on board, and vice versa. If the market is green and the RTY is red, very unlikely the market is going to break down without the RTY. So the RTY needs to break out without the RTY. The RTY needs to be on board with the other indexes to have broad market breadth that can push the market, out of ranges and into expansion. So they did give us a small spike that would have given us a sell stop. However, they're now pushing down. So we'll see how this plays out here. And that's a spike of the pre-market high and rejection so far. So if they fail back below this low here at 638.40, I would expect them to hit 637.22 and then see what happens there. ADD slightly positive to start the day, Gold slightly positive to start the day. That can change, and right now ADD is moving down slightly, so we'll see how this, early on, 1 minute into the day, so we'll see how that plays out. The true pre-market high is going to be 640, a little above that. So the tool that I use for pre-market high and low on the SPY, it gives truly the pre-market, which is the yellow here, and this is considered post-market in blue. So it doesn't give you the blue high, which is still a pre-market high. There's just something to keep in mind there overall. If you're in my group, you know that yesterday we talked about the fact that there are weekly sells brewing in a lot of places. And, if all of those sync up and hit at the end of the week, that would project some serious weakness in the market. So that's something to keep an eye on as well. You can see the long tail candle here. That brought us down to the pre-market low. I didn't see this action play out very often. That's a flash or like a secret tail. It's not, how the market moves kind of inching down. Very often this is a flash down and back up. So we'll see if they're able to come down and tag this zone and what happens down here, because obviously this zone got bought. So the pre-market low will be an important area to watch. So far they held yesterday's low and bounced off of that. And that is the key level to break to push us into 637.22. So far they've held this level. Breaking this will push us down into 637.22. Morning, Sam. Does the countdown for 4 look complete, or would you still expect to be with 5 down still to come? I'm not sure what you mean by 5 down, but 4 does not look complete because it needs to get in wave 1 territory now in the NQ. It could be complete because it did get into wave 1 territory, but ES still has further to go for a typical wave 4. Thoughts on gold? We only do the SPY on here, unless, you know, if you do a super chat or whatever, I'll do other charts real quick. But we're only doing the indicator and SPY. All that stuff's for my midday call, which people in my room get. We go over gold every single day. So if you want to join my room or do something along those lines, we can. We can do that. But typically this particular video live stream is going to be about the indicator and the SPY. We'll occasionally go over other things like supporting evidence, but overall we focus on the indicator and the SPY on these live streams. And welcome to the stream, George. Welcome to the stream, Alexi. Thank you. You have a great trading day too. The structure here does not look necessarily impulsive. This bounce never really got high enough for me to consider it a wave 2, and we could have potentially considered it impulsive at that point. But right now, it is what I would call corrective to the downside, and that's what you would expect in almost all cases anyway, except for the expanded B wave. But we'd be looking for something corrective down into the 63, 60 to 80 area. NASDAQ is looking weaker than ES here. It did make a lower low on its second bar, so this bar that's green here on the screen actually made a lower low on NASDAQ and then came up. So it does look a little a little bit weaker than the ES, which NASDAQ was leading yesterday, so that makes sense, and it's leading again today. RTY is red, so that's a good sign for the bears. Transports are red. Banks fairly green though. SMH and NVIDIA red, so another good sign for the bears. ADD is improving, as is the VOLD. Both are positive, so keep that in mind as we look at supporting evidence for a potential breakdown here. Those are things that you want to keep in mind for the overall picture of the day. So you do have some positive things here with banks, ADD advancing, the VOLD being a little bit green. If those things don't turn around, then we'd likely have a good day for potential reversals. Not like a reversal back to the highs, but like down here and hold, back up here and hold, back down, things like that. So let's keep an eye on what the chart does here, and we'll look for our next trade. It's going to be a buy, so now we've moved into a sell cycle. We haven't completed a sell cycle, but we've moved into a sell cycle. So a buy would be the next trade we'd be looking for. Right now I'm looking at a 639 strike. We're testing support again here. The yesterday's low is our support. Breaking below that creates a new low for the week. Not for the week, sorry. Breaking below that creates a daily lower low, is what I'm trying to say. And daily lower lows are something you haven't seen much in this market, so that constitutes at least a little bit of follow through. If we go to the daily chart real quick here, well, the market's greening down. You'll see that one of the first times we got a lower low on the daily chart was Monday. And then yesterday they made a another lower low, and today they're making another lower low. So bears are trending in the right direction. If you look at the move up for a long time, higher low, 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 and then finally lower low there. And this was the sign of the first weakness. We've also back tested the breakout and failed so far. So this was the breakout zone right here, and they failed that. So just a couple of things to keep in mind when you're looking at trend. A very common target is going to be 635.55, which happens to be the one-day min today. It's almost like they do it on purpose. So the one-day minimum is going to be coinciding with the 21. That's going to be a great place to buy, because I would expect a bounce off of that area. I would definitely expect something like, not definitely, I would very much expect this kind of move that gets us into wave one territory and then back up. Nvidia will be an interesting one to keep an eye on, especially as earnings come in next week. They broke below their daily 21 and closed below it yesterday, and today they were following through. So if they close below it again today with follow through to the downside, that would be an interesting development for the overall market, as it is, the biggest stock in the world, and if it's in a downtrend, it's going to bring the market with it. Quick reversal on ADD there. They got up to positive 400 and instantly dropped back down to almost positive 300 in just a couple of minutes. So 100 stock delta reversal there is pretty interesting. Market now breaking below that support we talked about, so I would expect to see 637.22 at a minimum and see what happens off of that level. Yes, I would, George T. When the indicator flashes and prices move fast, do you wait or just get the price at the time? So I generally can get pretty close to price based on how I do it. So right now, for instance, a 639 call is about 88 cents. I have my limit set to 95 cents, so that, and I keep moving that up or down as price moves up or down, as price moves. And so as soon as I see the buy signal, I have I don't know, 7 to 10 cent delta of where I can get in, and I hit the execute order button, or buy button, whatever, sell button. And because I have that extra space, I can usually get in before the market moves too fast or too far. And usually it's within a couple pennies of price. So right now it's at 80 cents, that 632 call. Or I'm sorry, 639 call, which I'm going to move down one here to 638. So it's at $1.20 right now. I would usually get in between $1.20 and $1.23, 24. Sometimes it's a little faster, so I might get $1.26, which isn't ideal, but it's what you get. So I try to get in as fast as I can, unless we're at like VWAP. So if we get a buy signal right at VWAP, I tend to wait because you at least get a little mid-bar rejection and you can get a better price, and then they try to get through VWAP. So if they're at a major moving average like the 21 or VWAP, I tend to wait and see if they reject a little bit first in either direction, because you can usually get a little better price. George T, thank you. Did you want to see gold? MUX and GDXJ. Okay, I'll pull those up in just a second. I'm going to put them on a different screen, and then I'm going to pull them over so that the screen can stay up for everybody else while I do it. So give me 1 second, George, and we'll do that. You want to see it with the indicator, so we'll do that. MUX GDXJ. Let's back up over here. Okay, George. So here is, let me make sure this switched over. One second. There we go. Here's MUX. This is the 5-minute chart. It doesn't trade overnight. So you had a buy signal right at the close, and that buy signal took off from yesterday. So if it does trade overnight, it's not much. I don't see anything in here. But so you have a buy on it in the 5-minute chart. If we go to the weekly chart, we'll see what we get as far as the weekly goes. The weekly chart issued a sell signal the week of July 28th. So on the weekly, it has a sell, and it's at the daily 8, or the weekly 8. This is going to be a big momentum area. It's struggled to get back above it. As of right now, you have it in a sell. That makes a little bit of sense. This does look like a potential for a couple of things here. You have A, B, C potential down. Wait, this is much different. Hold on, let me look back here. Yeah, so you have a very corrective bounce here. So you would expect this corrective bounce to fail again to the downside. And even if they're trying to be impulsive, you would expect a failure here as well, down maybe to 8 or so. So it does have a sell signal. Last sell signal worked out really well. This buy signal worked out really well. So as of right now, it's in a sell on the weekly, and overall it's in a downtrend and an ugly corrective pattern. This is corrective as well, so I wouldn't want to be long this stock very much. I would say that 641 is critical support. They've held it a ton here. If they break that, they're going to come down and test these lows down here at 281. If they're able to hold in here somewhere, they can take it higher in a bigger C wave. So this could be, you know, a leading diagonal, a 1-2 setup, something like that. It's not something I would really love, honestly. So sell makes sense as this is a corrective pattern, and I would expect a little bit more downside. Still creating down on the SPY here. And then let me do the other one and I'll bring it back over. We've broken the pre-market low, FYI, said they should come down to that level at least, and we'll see what happens. And are continuing to sell pretty strongly here, so we do have the makings of a trend day, so this could be a quick stream. We look at our background stuff. Yeah, ADD is absolutely getting murdered. It was up to positive 400. It is now down to 200 in a flash. Vol turning very negative here. You're seeing volume stay pretty equal and solid here. So this is where I would expect we'll take a buy off of this level for sure. This is the 21 daily. It's put support. It's the 1-day minimum. This will be a great level to get a buy signal. So hopefully we get that. Hold on, George. I still got your other one coming. Just give me 1 second here. GDXJ. All right, George, so for your second one, GDXJ, on the weekly, it is trying to issue a sell signal right here. It is trying to stay below VWAP. I would wait till Friday to make sure that this bar follows through, as this is a pretty strong uptrend. So it has issued a sell signal. I would be targeting 65 first, and then below that we'd be looking at 57 and then 49. It does have a recent breakout area right here at 71.43, so it's got to get below. It spiked it and so far has bounced. So I'd wait to make sure that this weekly candle plays out in a sell. But those would be the targets. Again, you have 65, 57, and then this area right here is okay. It's going to be 49. Any bigger sense? It's probably tracking pretty similar to gold, yeah. The gold miners I don't think are going to make new highs. I honestly don't. But they still have plenty of room to rally with gold. And they are in that breakout. So I would consider this the start of like an ABC. So a pullback here would not be unreasonable. You'd be looking at this as like, you'd be looking at this as like A, B, C for A, B, and then 1 of C, 2 of C, and a breakout like that. So this sell signal I could understand. This is going to be major resistance right here at 102. So should they break out above this resistance that they're in, the next major resistance will be 102. So I do view them as in a corrective bouncing pattern that would track with gold. Gold should be, gold's consolidating. If they break to the downside, they should be pulling back into the 270 zone and then accelerating higher. However, if they break to the upside, it'll be a direct move to 340, 350 on GLD. All right, we are at the 1-day minimum area. So we're looking for a buy here. We're adjusting our trade. Man, volatility picked up here. Prices were about 118 or so, now they're 150, so that favors the bears. However, they're at their 1-day min. They did break through the 1-day min yesterday, but this is the 21. I would expect a bounce here, at least back to the 8 or VWAP. A big volume on this selling bar, by the way, that took us down right here. You can see it was higher than the opening volume. As far as overall volume, it's yeah, heavy volume here, guys. This is, you can see yesterday's opening volume was down here, and almost every bar today is above yesterday's opening volume. So it's a high volume selling, and yesterday's volume was pretty decent. Blasting through the 1-day min. Nvidia getting smoked again. It's down 2.8% right now, well below its daily 21. I'm gonna pull it up real quick. Well, we could get a buy here, so I'm gonna wait. They spiked it. We're looking for a buy signal here at 636 is our strike that we're looking for right now. See if we get a buy signal here off of this key level. The market makers are very good at knowing where the market should hold, and these 1-day minimum and maximums are very strong. Yesterday they actually broke through, so that was interesting, and pushed below it. But way more often than not, this holds for the day. And they're careening down into it pretty fast, which usually creates panic, which is what they want to trap. So they come down into this area here, they trap sellers, and then they reverse it back up off of that zone. Did they get into wave 1 territory? Very, very close. So this could definitely be the end of 4. We could rally back to highs here. It's a very critical area, especially if they spike it a little tiny bit lower into, you know, that, what's the low today? 63.83 when it was this over here. 77, yeah, so just a little bit lower would get us into wave 1 territory and this support here. I'd like to see that, but essentially they basically have done what I expected them to do. Now the question is, can the bulls fight back, or do we have lower to go? Given the critical levels that we're at, I think the bulls should at least, given the strength of this bull market, the bulls should at least show some face here and try to fight this back to the 21 or so. You can See, there's heavy buy volume coming in right here. It's higher than the open as well. Second highest bar of the day. Still a minute to go on this bar, and the bulls are holding support here. So this is a critical area. I would expect the bulls to hold. But if they don't, that could show you how much weakness really is in the market and how much volume really is coming through on the sell side. When I say hold, I don't necessarily mean to all-time highs. But I do think a bounce is warranted off of this level more often than not. But I mean, if you look at NVIDIA on the daily chart, we'll come back to that in just a second. It is just a waterfall, and on the daily, it's 21's way up here and turned down sharply now. So they are into their next level. So the 167 is the NVIDIA one-day min. So they have plenty of room down on NVIDIA. Just a random one to look at there. We've hit the 21 here, so interesting to see what happens. The bulls are able to come to life here a little. When you have high volume selling, like we had here on the way down, it does take a minute for weakness to appear. The indicator doesn't just say, oh, there's a green bar, so we're going to get long. It takes a minute for things to change. Until they do, it will still be a selling cycle. Even when the buy issues, it's in a selling cycle, but it's in one that's weakening. Did I hear a buy alarm? No. You might have heard a text message or something. Thank you, Jacob. I encourage you to mention you to set up a session to analyze stocks for followers. So that's our daily video, George. Every day at 10 o'clock Pacific time, 1 Eastern, I have a video, and I go through all of the followers all of the people who have joined my room can get on that call, and they can ask about any stocks they want. It's about a 30 minute to 1 hour call, just depending on the day, where we go through any stocks anybody wants to see. On most days, I go through the Mag 7, gold, Bitcoin, and the indexes. and go over some other market features as well as do training. So that's all a product of the live room. Past the daily 21 EMA. No, I mean, yes, they spiked through it, but you gotta remember it's early in the day, and that's a daily moving average. So where they close the day is when you'll decide if they're past the 21 or not. Curious where NASDAQ is in relation to its 1-day minimum. Sometimes they can push each other into and then spike back above minimums. NASDAQ has blown through its 1-day minimum. This could be an ugly day. When 1-day minimums and 1-day maximums don't hold, market makers get pinned really badly, which means they have to hedge strongly, which means you get cascading down type of effect here. So NASDAQ just getting smoked. Isn't it looking like 5-wave move up complete? NASDAQ still has a little bit of room into support here. ES is just now getting into wave 1 territory. So if you're in my room, we talked about this, that the break of this upper support would take us into 64.20, and a break of that support would lead us down here into wave 1 territory. So we're exactly where we expect to be here. We would be looking for the bulls to try to find some fight, especially off of the 21, especially off of this support, especially off of the 1-day minimum for options. I mean, this is a big time breakthrough for the bears that if they can sustain this for the day, this will get out of control. Because again, when market makers are pinned like this, there's nowhere to go but hedge. And so if they're hedging, that means they're buying puts. And if they're buying puts, that means the market's getting pushed down. They really don't want to be here. So it's a very awkward spot for the market maker. And that he wants price to go up, but he has to buy puts, which pushes price down. It's a catch-22, if you will. Is there ever a scenario where you see a trend day coming and you trade it even if the sell or buy came pre-market like today? Generally, no. Generally, if I'm trading, I just want to trade with the indicator because it has the knowledge, and if I miss a move, I'm perfectly fine with it. Some people, as we know, trade the stop. So what I mean by that is, for instance, yesterday when they trended, when they came down, and then you got this long stop right here, a lot of people will short that because the long failed. You have a trend day set up, so you're expecting the trend to continue, and that would have been a nice play. You could have also played this exact same position. What I would play if I was going to play anything is the break of the pre-market low, the back test, and then once they start back down, I would short there with this, being my stop, and look for continuation like that. So that is a possibility to do something like that. I will tell you that I will be very surprised if they close below the 1-day minimum today. The 21 almost always provides some level of support, even if it's just for a day, even if it just bounces today and then tomorrow they're down below it. You almost never see them just blow through the 20 or 21. Notice I said almost never. Again, the stock market is just playing probabilities, and the probability is that the market will bounce the 21, whether it spikes through and bounces it, or it comes up a little short and bounces it, or it bounces it directly off of it. More often than not, the market will bounce the 21 or reject it from the downside. Just like on the 5-minute chart. Very rare that it just blows through without any kind of fight. What sucks is the first bar today gave us it was going to give us a sell stop if they could have just held it for the bar, and then we would have got the sell signal that they gave us pre-market. But again, you miss moves, that's part of trading. The sell is correct, it's right here, you have it, it's just in the pre-market, so we don't trade it. Another 4 or 5 to go, or we are there. I mean, technically we're where you would expect the market to hold. We're in wave 1 territory on both charts. We're at the 1-day minimum on this chart, a little below it, and the ES or the NQ is well below its 1-day minimum. Again, it's getting smoked. I mean, it's down 1.5%. It's not, but when it blows through its 1 day minimum, that is generally an eyebrow raising. Um, so is there more downside to come? Very possible. But we're also, again, a key support, uh, an area that I would expect the market to hold. And I would honestly expect it to hold here for a push to all-time highs, because if it bounces and goes lower, NQ is going to fail. So this is going to be the area you need the market to hold, to keep the short-term pattern alive. The larger pattern can still play out in different ways, but in the short term, this is the area you're looking for to hold. And again, really big volume today. I kind of want to look at the daily volume candle already, even this early in the day. Yeah, yesterday's volume turned out to be pretty decent. Not decent, but above average, or on that follow through. And then today's, I think, will be bigger. The volume today is much better already. But we are at the 21 again. This is an area you would expect to hold, but this was a vertical market. I mean, this is a vertical market, and you have a very strong potential that this is a bigger 4 or 5 that's completed. Overall, I'd still like to see one more high personally, just because it's structurally better, but you do have enough waves in place for this to be done, and you do have a higher high, so a collapse here would be what it is. And we do have a weekly selling bar on the SPY that is forming this week, so assuming they can hold on through Thursday and Friday, we would assume that that selling bar would continue. If we get a buy relatively soon, I will take it. Otherwise, if they continue this push down, I do not want to fight this market. We are in a trend day. They have broken the pre-market low, and then they backtested the 8. Not quite a backtest of VWAP in the 21. I'd still like to see that, honestly. But as of right now, if they continue to break down, this is going to cascade further. But we will take the first buy signal and see if we can get any kind of rebound here, back through the 21 and up into the VWAP, 21 moving average areas. But if they go much further to the downside, I will not be looking for the market to have any kind of bounce today that I want to play anyway. It can certainly bounce, just I'm not looking for that kind of entry. I'm not trying to play against a strong downtrend. back into previous resistance here. Need to get back above this 1-day min area, basically back above the 21 and through this 8 on the 5-minute chart, the 635.50 area. If it gets back through that, we should start to see him roll higher a little bit in a bounce, and then how that bounce plays out will be to be determined overall. Slowing down, the trend still is down. Yes, of course, we are in a downtrend until they break back above the 21. So they got to get back above 637.22. If they get back above that, we would expect them to come back up to the pre-market high. NASDAQ broke 23,000. It did, but it didn't break 23,000. Sorry. Not NQ. I got you. You're talking about the NDX. Back test, yeah, all we need is a tweet and we will get a buy signal. Is there any significance if we get above the put support 0 DTE? Yeah, I mean, that's where the market makers want price, and they will push price then back up. There's our buy signal. So we're going to take a call here at 88 cents at 636. And our stop is going to be 634.50. So we are officially long here, guys. Hold me 1 second. Let's see if the bulls have any follow through whatsoever. This is going to be a key area. They're at the 8. I probably should have waited a second here. I knew there'd be a little bit of rejection off of this. But I was talking, and the live stream does make things go a little quicker. So we did get a buy signal. It flashed here. We'll see if the bulls can hold. If they can't hold and we get stopped out right away, if the buy signal reappears, we will re-enter. I'll take a couple chances off of this level. This is a key level that the bulls wanted to hold, and it may take them a minute to get back through it, but if they do, this should squeeze fairly decent because of all the trapped late shorts. We can squeeze, a mini squeeze back up into the 636.70 area, which is about a 2-point move. And then we'll see if they can continue squeezing from there. So they got to get through the 8. If they do that, we'll see momentum switch, and should start to see the market move higher. But they first got to get through the 8. Good test so far. That's the line in the sand now, 63.78. Yeah, roughly. They're back testing momentum right now. So the 8 is your momentum, the 8-day, or in this case, the 8, it's the 5-minute chart, so the 5 8-minute bars. This is your momentum indicator. As long as they're below that, momentum and pressure is down. But the indicator does see weakness starting to appear. And if they're able to get back above the 8, then we would look for them to squeeze a little bit here. It's not surprising to see the bulls struggle at the 8 here. Bears have all the momentum and all the strength, so they're going to defend at that level really hard because they want to keep pressure down. They want to keep the market moving down. They want to keep breaking lower lows, and to do that, they want to keep momentum on the downside. So seeing a little bit of a battle here is certainly not anything shocking. We may get a retest of the low first, and so we'll probably get stopped out if that happens. But if they retest this low and then push higher, we'd likely get another buy. Okay, there's our stop, and that was at 75 cents. Get that updated real quick. I will take one more bullet here. I understand we are against the trend, and that's typically not what we do. If they get another buy signal, so if they hold this low and then they push back up off of it and give us a buy signal, I will take one more shot because we would be in a good spot here for a low, a back test of the low that fails, and then a breakout. So I will take one more stab at it. If that doesn't work, that will be it for our stream today. It'll be fairly short. But that's what happens on trend days. We don't want to trade against the trend, and that's just burning up money. So we're going to give them one more chance to at least give us a bounce, maybe not change the trend of the day. And if that happens, we'll stay tuned and see what happens. But as of right now, the bears are in control. If you're looking at supporting evidence, the ADD and the VOLT are very red. The ADD was positive 400, now it's like negative 300, and the VOLT is negative 32 million. So bears have the momentum and the supporting evidence right now. The transports are very red. RTY is very red. So I would expect this to overall be a trend down day, but again, looking for a potential bounce here. And then if they break this low, then we're probably just going to call it, because that's another back test of the 8 that held and a continuation to the downside. So. NASDAQ has flattened out a little bit here. We may get some consolidation to allow VWAP and the 21 to come down to price. So remember, we can always get back to the 21 two different ways. The first way is obviously straight into it. The second way is they consolidate down here like this, and the 21 moves down to price. But they will always come back together when they get separated. Do you think SPY Future can hit 63.10 today? Or just in general? In general, yeah, of course. I think it will at some point hit well below 63.10, but today, possible. I'm going to do a refresh on the screen, because very often when they break the one-day min, they will the market makers will reestablish a new point of interest. Where they'll want price to stop. There's an offer for me. Nothing has been oh, Yeah, they did reestablish it lower right here. So they're at the new one-day min at 633.91. So we will give them a chance to hold here. And if we get a buy signal, we'll take one more stab at it and then call it. The market has put us in negative gamma for the first time in a while, so there's something. We're below the put support. $6,400 was a big support zone, and they broke through it pretty easily, honestly. So we are in negative gamma, which means the bears are in control until or unless the bulls can get back over 6,400 on the SPX. 6,400 on the ES will be a big number too. So if they can get above that, that would be a significant win for the bulls and change momentum a little bit to the upside. I do want to see if they reestablished a one-day min on the NQ as well, since they absolutely blew through the other one. This was your original one-day min. They didn't even stop. Didn't even look at it. That's crazy. No, nothing below except this put support down here at 23,000. So 23,000 on the NQ will be a key level. We're at a key level right now on the SPY. If they continue to push down, this is going to continue to accelerate because the market makers get more and more behind on where they're at. Thanks, you were so awesome. I always follow your analysis and I made a good profit. That's awesome. I'm glad to hear that. As you said in your earlier video, once they back to 64.40, it will be a hit on the downside. Yep, that's correct. What good is the one-day min if it just changes when they break it? Well, so think of like a series of locks and dams. If you go up the river from Hoover Dam, there's several other dams up there and lakes that they fill with dams. And if you get a flood, okay, and it's too much for the first dam to take, even though that dam was built for a serious amount of flooding, there are going to be there are once in a lifetime storms. There are, I'm not saying this is a once in a lifetime storm, but there are things that happen that are unforeseen that can break that dam or cause that dam to have to allow more water to roll down river to the next dam. So the one-day min is established as, hey, 90% of the time this dam is going to hold the market. It's going to be fine. But there are times when that dam is overwhelmed and you can't let the dam break, or you have to let water through the dam. So you let the water through, and if that happens, you have to establish a new point of contact. So where's the next dam? Where's the next ability to stop the market? So it's not so much that it's useless. It's so you're thinking in absolutes again. Again, probabilities are how the market works. We don't think in one-day minimum must hold the market. If it doesn't, then it's the dumbest thing ever. We think of it as this is a key level. They bounced it. They failed. They got through it. It doesn't happen very often. And quite frankly, getting through it, it's more about closing below it than getting through it. So this dam or this one-day minimum can still hold. They can still close back above it, and most of the time they will. But sometimes a little water has to get through to calm the tide before you can push back the water. I hope that makes sense. The beach catches the ocean every single time until a hurricane comes through, and then the houses start to catch the ocean. So your one-day min, think of it as, your seawall, and then the hurricane comes and the seawall is pretty useless. There are just days that it's not going to work. And that's what probabilities are. most of the time they work. However, there are times that they don't. I would say over the past year, if you traded off the 1 day minimum and 1 day maximum, and that's all you traded, you would be a very, 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 very happy person. Well, I guess what I mean is in hindsight, it will likely always look like it held once you will be seeing the latest version of the EOD, when in reality it may break way more often. Also, the old one stays after they keep the old one on there, so you know what the original one was. I mean, yes, is the answer. They do keep the 1 day minimum on there and the secondary, so you have both on the chart. You can see where they expected the market to hold and now where they're hoping they can hold. And I do say hoping because you have a hurricane coming through right now. This level doesn't hold. What are we looking at? I mean, they're in a pretty heavy resistance zone here, or support zone, I should say. All through here is good support. They've basically just gotten into the top of 1 day wave 1 territory, which is what you would expect. So I still think that between here and 6360 is very, very, I mean, I have my line drawn here at 6360. I think this is a very strong support zone. Now, if they break 6360, well, then I think that we're looking at 6315 to 26 here, 6315 to 25, this zone right here. And if they can't hold there, then we're looking at testing the August lows. They've slowed the momentum, but the trend, the pressure, and everything else is still in fact down. And they may accelerate here again because they're breaking the next 1 day min. This bar has made a new low. We almost got to a buy signal earlier, so I'm going to give them a couple more bars here to try to hold this area. And if they can't do it by, we'll say 8 o'clock, if they can't give us a buy signal by 8 o'clock or hold this area, I will go ahead and cut the stream. So keep in mind that 30% off of the indicator you can get while the stream is running, and just after the stream, after that goes away, the yearly, same thing, you can get those free courses while this is running, and slightly after while I get things set up. But overall, you are, but after that, I should say, not overall, but after that, those codes go away and you can't get those deals. So make sure you do that. I know there wasn't a lot of trading today, but I gave you good information, or I hope I gave that. I can't say that. That's not for me to say. I hope I gave you good information that you guys could use, gave you key levels and what we were looking for and what kind of things are happening in the market here. So if you like that, hit that like button. It helps me spread the word, get my message out, get subscribers, all those different things. Hit the like button, and it only takes a second, pretty easy to do, free of charge. And that way you can, or I can get my video spread out to more people and build the community a little better, and hopefully help other traders too. This is definitely an area, if I was short, I'd be trimming. I wouldn't necessarily close my position, but I'd be taking it down to a much smaller position. You know, you're at a secondary 1 day min, which those tend to hold pretty well. Obviously right now that's not happening, but you want to just protect your gains. You don't want, if they do bounce it here, I suspect it would be fairly strong and you could lose your gains pretty quick. So I would trim a little here and then leave runners for if they do continue to just cascade this down strongly. Of course, you always want to maximize your gains, but maximizing your gains generally comes by taking money off at key levels, not trying to ride it out. So when you get here, you take money off, and the reason is you're at a major support zone, you're at the daily 21, there's a lot of reasons for the market to hold here, and if they do hold, this happens and you lose a big chunk, because then you're like, oh, it's going to be a higher low, and they're going to come back down, and then they don't. And this happens fairly often because it's a major support zone. On the times it doesn't happen, you have runners to collect. So if you collect here and then let your runners collect more, that's way more profitable than trying to hold and break through here and then having to close up here and losing a big chunk of your gains. Never be results oriented in trading. That might sound counterintuitive or contradictory, but it is the most important lesson you can have. In other words, one trade doesn't matter. 10 trades don't matter. You should be results oriented in the big picture, of course. You have to be making money. If you're not making money, then what are we doing? Okay, we got a buy here. We're going to try and take it. We're going to take 634, and we got 124. And our stop is going to be 633.20. This will be our last bullet here, just below the 1-day min, looking for them to try to get back above it and then squeeze back up into this 635.74 area would be ideal, but they got to get through, they got to get through the 1-day minimum, which is basically 634, and then they got to get through 634.25. If they can do that, then we can see a little bit of upward movement here. Otherwise, game over for the bulls, for me today anyway. I mean, they could find a rally later today, but that's not what I'm not going to hang around for that. Immediate rejection on that. There's your stop. Wow, that was quick. 99 cents on that stop, and we're done for the day. Trend day down, confirmed and strong, so we are no longer going to try to trade against it. We took 2 punches in the face, that's enough for me. This is where people overtrade or revenge trade or say it's got to go up here or do that. It doesn't have to do anything. It didn't have to go up at all. I didn't really love taking that trade, but I wanted to give them one more shot because of where we were and how overextended we are to the downside. But given the market dynamic to the upside lately, a strong downside move that seems to be extraordinarily sharp is not surprising. So unfortunately, trend days are slow trading days. We had a couple, they didn't work out, and that's how it goes. Remember, the kryptonite of the indicator is trend, because we are looking for reversals. And so what the indicator always looks for is it looks for a support zone to trade off of, and if it gets the right set of circumstances, it will take that trade, not understanding that on trend days those support zones don't hold. So that's where we're at. We'll go ahead and close it out here. If you guys, thank you for looking at Mux. No problem, George. Happy to do it. Thank you for the super chat. I really, really appreciate it. Thank you guys all for being here. Here's your third buy signal if you want to take it. Third time's a charm, says Sean. Could very well be. It could very well be. I'm not going to take it. Like I said, I've touched the stove twice. My fingers are blistered. I don't need a third blister. So hit the like button if we got good information today. I know the trading wasn't great because, you know, trend day is what it is. Not great for anybody unless you shorted the open. And we'll do it again next week. For those of you in my room, we'll be here at 10 o'clock for the call, but it's a trend day, so we're sit on hands for the rest of the day. All right. Thanks, everybody. I really, really appreciate it. And we'll